Elena opens the mail beside a half-finished invoice stack. One letter says her Joe's $349 to avoid federal ownership penalties. Her stomach drops. She formed the company herself, after dinner, between school pickup and payroll. The letter looks formal enough to ruin her morning. This is the BOI mess right now. The law shifted. The mailers did not. And some compliant sellers are still monetizing old fear. And Vincent says, all entities created in the United States, including companies previously called domestic reporting companies, are currently exempt from federal BOI reporting. That means Elena's first move is not panic. It is pause. Because a scary envelope is not the same thing as a real obligation. If you get one of these letters, consider treating it like any surprise invoice. Verify the source, verify the rule, then decide. The confusion is understandable. For months, owners heard about massive penalties, court fights, changing deadlines, and accountants scrambling to interpret federal updates. Treasury announced an interim final rule removing BOI reporting requirements for U.S. companies and U.S. persons, effective in March 2025. So before paying anyone, check FinCEN's current BOI page yourself or ask your accountant to confirm your entity type and status. Elena's letter uses the usual pressure points: a deadline, a processing fee, a warning about penalties, a seal that feels official enough. FinCEN warns that payment demands, suspicious links, QR codes, fake forms, and penalty threats may be fraudulent. FinCEN says direct BOI filing has no fee. Use a 3-question test. Was your entity created in the U.S.? Is it foreign and registered here? Is the sender actually government? Question 1 matters most for many listeners. If your DA, corporation, or similar entity was created under state law, you likely pause. FinCEN's current guidance says domestic U.S. created entities and their beneficial owners are exempt from the requirement to report beneficial ownership information. Question 2 catches the exception. If you manage a foreign company registered to do business in a state, do not ignore BOI. FinCEN says certain foreign reporting companies still must file, with deadlines based on when their U.S. registration became effective. If you're in that foreign entity bucket, consider calling counsel or a qualified advisor. The definitions can turn on small facts. For domestic owners, the practical job is different. You are not racing to file. You are separating real compliance from noise. Create a one-page BOI file anyway. Not because you must file today, but because rules can shift and records beat memory. Put your formation date, state documents, ownership percentages, manager names, and any prior BOI confirmation in that file. Keep it boring.
FinCEN states there is no fee to file BOI directly with FinCEN, which makes surprise payment notices worth questioning immediately.
Do not confuse federal BOI with state filings. Your annual report, franchise tax, registered agent fee, or license renewal may still be real. That is how scammers win. They blur one real obligation into another, then add urgency until a busy owner reaches for the card. Try this workflow: government site first, advisor second, payment last. If the first 2 steps do not confirm it, do not pay. Also protect your ownership data. Names, birth dates, addresses, and identification details are sensitive. Consider sharing them only through verified channels. Elena almost saying when the oven repair was overdue. Deb said the prior TIA mandate could have affected about 32 million small businesses, which explains why confusion spread so widely. But confusion is not a business strategy. One calm verification habit may save money, data, and a few hours of founder anxiety. Add BOI to a compliance tracker with 3 columns: current status, source checked, next review. Keep the labels simple for your team. FinCEN said the interim final rule was effective immediately, while comments were being accepted and a final rule was expected later. That is the uncomfortable middle. The immediate burden changed, but the topic is not necessarily gone forever. Small businesses need lightweight vigilance. This content is for educational and informational purposes only and does not constitute financial advice. Always consult with a qualified financial advisor or business consultant before making significant financial decisions. Call your registered agent if a notice mentions them. Ask whether they sent it, whether it is required, and what government source supports it. And train the person opening mail. In many tiny businesses, that person is a spouse, a part-time assistant, or you at midnight. Tell them to flag anything demanding BOI payment, asking for identity documents, using urgent penalty language, or pushing a link or code. FinCEN specifically warns about correspondence referencing fake forms, unofficial department names, suspicious web addresses, payment demands, QR codes, and threats. If you already paid a questionable vendor, consider calling your bank, saving all records, and asking an advisor whether any data exposure needs follow-up. Save the envelope, email headers, payment receipt, and screenshots. Those details may help your bank, counsel, or fraud report. Some owners already filed BOI before the U-turn. If that is you, breathe. The key now is documentation, not regret. FinCEN's current alert says domestic entities and their beneficial owners are exempt from reporting, even if those entities were previously covered. Do not delete old confirmations. Keep them with your formation documents. If the rule changes again, a clear trail may help. Your owner list should include anyone with substantial control and anyone around the quarter ownership line. Ask your advisor how to interpret edge cases. This is not about becoming a compliance lawyer. It is about keeping enough facts close so you are not rebuilt by every headline. Foreign entities that meet the revised reporting, company definition, and do not qualify for an exemption still have BOI obligations under FinCEN guidance. If your structure crosses borders, please do not rely on a podcast alone. Consider getting entity-specific guidance before skipping or filing. Build a tiny decision tree, domestic created here, foreign registered here, exempt category, advisor consulted, action taken. Update it when guidance changes. Elena calls her accountant, not for a grand strategy session, for a 10-minute reality check before sending money to strangers. If this kind of practical signal helps, follow the show. We are trying to make the noisy parts of ownership a little quieter. Treasury described the interim rule as removing a burden from American taxpayers and small businesses, while FinCEN moved toward final rulemaking. Her accountant confirms the pattern. Domestic YEC. Current federal exemption. No need to pay the mailer. Keep records and watch updates. Here is the email you can send. Can you confirm whether my entity currently has any federal BOI filing requirement under FinCEN's latest guidance? Then ask, if not, should I retain any documents? And when should we review this again? Simple questions usually beat anxious guessing. The vendor selling fear may sound helpful, but urgency plus vague authority is a classic small business tax on your attention. FinCEN advises the public not to respond to fraudulent BOI correspondence or click suspicious links tied to these notices. That one habit may help across taxes, licenses, domain renewals, payroll notices, and every other official-looking thing that lands on your desk. If your ownership is mixed, say a U.S. louse owned by a foreign parent, slow down and get specific guidance. Treasury's announcement said the rule removed BOI reporting requirements for U.S. companies and U.S. persons under the Corporate Transparency Act framework. Do not let broad summaries decide a complex structure. Many businesses find that one paid professional hour prevents several unpaid cleanup days. Before that call, gather formation papers, foreign registration records, ownership chart, manager list, and any prior filing receipts. Preparation shortens the bill. Now, what can Elena ignore? The fee demand. The fake deadline. The private company pretending its service is the only path. She does not ignore the topic. She files the letter, notes the verification date, and adds a reminder to review official guidance later. FinCEN's revised rule narrowed the reporting company definition so domestic entities are no longer treated as reporting companies for BOI purposes. That phrasing matters because future changes may reuse old terms. Keep your file understandable to someone who is not living in this saga. Set a quarterly compliance check. 10 minutes. Confirm licenses, taxes, BOI status, insurance renewals, and any state filings. Then get back to selling. Elena ends the morning 20 minutes behind, but $349 intact. More important, she has a system now. This episode is not financial advice. It is a flashlight. Use it to ask better questions before money or personal data leaves your business. NEBIC continues tracking litigation and advocacy around the Kiate, which is why owners should avoid treating the issue as permanently settled. Give your team one rule. No surprise compliance payment goes out until a real government source or trusted advisor confirms it. Small businesses lose time in tiny leaks. A fake notice here. A rushed renewal there. The antidote is not paranoia. It is process. The signal is simple. For domestic U.S. companies, the federal BOI requirement has been pulled back for now. Verify before you pay. If you are foreign, registered, mixed, structure, or unsure, get help. The cost of clarity may be smaller than the cost of guessing. And if a letter tries to scare you into paying today, remember Elena's move, pause, verify, document, then decide.